Welcome to Trading Nation. I'm Sarah Eisen. Let's check on the industrials, among the best performing sectors in the last month, with heavyweights like Boeing near record highs. Are we gearing up for an industrial-sized rally? Todd Gordon with TradingAnalysis.com, Chad Morganlander with Washington Crossing Advisors. Chad, you're bullish on the group. Make your case and explain whether you're worried about trade wars, which could be a big headwind for these guys.
Yeah, even with trade wars, you have a couple of industrials that have come down in quite a bit. We do think global growth is decelerating at a modest rate. Overall, though, we do like the industry. So look at a company like 3M. 3M has come down 60 points, is roughly 200 and change. We think that you can get a short-term trade out of this and also a long-term buy out of it if you have a 3 to 5 year time horizon. Also, a second company that we think is going to do quite well over the next 18 months is Stanley Black & Decker. This is a company that also, like 3M, has come down quite a bit. So you could find value in the industrial side, even if you do have a global slowdown, of which we think, though, overall, these are good long-term buys as well as good trades.
Todd, you've been charting the XLI. How does it look?
Yeah, I absolutely agree from a chart point of view with Chad in that they've been underperforming. So on the top of this chart here is the XLI, the industrials. Below it is the XLI to the SPX, so it's a ratio. Basically, if the chart is moving lower, the XLI is weakening as the S&P is strengthening. And what you've seen as the XLI SPX ratio has been in decline, and we've yet to break through that downtrend. So in order to see industrials truly come back, I'd like to see them begin outperforming the S&P, which, as you know, the S&P is underperforming both the small caps and the NASDAQ. So you're talking about an underperformer of an underperforming index. So we'd like to see a little bit of relative strength for those industrials to come back. But I do have two stocks, as Chad said. There are some bright spots in the industrials here, stocks that we can trade, and number one is Boeing. Really, really beautiful chart here. Boeing has fallen into a nice consolidation here for a good period of time. And what you do in order to come up with a target is you take the net distance traveled of the range here, project that from the breakout, which I believe is occurring right now, and that's going to get you a $442 target, which is pretty amazing. That's some serious market cap tacked onto Boeing. I don't think it's going to happen next month, but over the next 6 to 12 months, if the market does stabilize, that's possible. So I like Boeing on the top side, and then the other one that does look good and is susceptible to a trade war, but again, price action rules in my world, is Caterpillar. Caterpillar just looks beautiful, just a beautiful break above 105 support here. Resistance that is now serving as support. We have this little consolidation here in this period of market volatility in 2018, and it looks like it's ready to continue on through up to about 180. So Caterpillar I really like, and I also throw that weak dollar in those industrials that have a lot of exposure internationally. Dollar is really selling off here, and I think it's going to help some of those multinational industrials.
Caterpillar, Boeing, Stanley Black & Decker, guys, thank you. Got the picks. And thank you all for watching Trading Nation. I'm Sarah Eisen. We'll see you next time.